Bismillahirrahmanirrahim. Assalamu alaikum, dear friends and students. वेलकम टू माय यूट्यूब चैनल डिजिलर्नर पॉइंट्स। आज के इस वीडियो ट्यूटोरियल में हम 0438 जिसका सब्जेक्ट एक नेम प्रिंसिपल ऑफ अकाउंटिंग है और ये बी कॉम से रिलेटेड है। AIOU जो स्टूडेंट्स हैं उनसे मुतल्लिका है ये असाइनमेंट। तो इस असाइनमेंट नंबर 1 का हम क्वेश्चन नंबर 4 सॉल्व करने की कोशिश करेंगे। लेट्स स्टार्ट रीडिंग द क्वेश्चन नंबर 4, देन वी विल go to the requirement, and finally we will move to the solutions. Let's start. Question number 4. On 1st July 2015, Zahid purchases machinery for rupees 600,000. Depreciation is to be charged at 10% on straight line method and reducing balance method each year. In my opinion, for the sake of understanding, they have asked you Mr. Zahid and his company maintaining a schedule of depreciation on the basis of two methods. But in reality, either you can use straight line method or reducing balance method. The both methods cannot be applied by a company on the same time. But what I perceive from the question, it is just for the sake of giving you the more detailed understanding of the two methods regarding the depreciation. So on 31st October 2017, please be careful and give more attention on the dates. Machinery was sold for rupees 140,000. The machine was purchased on 1st July 2015 with the cost rupees 600,000. As they become useless because they become obsolete, on the same date he purchased new machinery for rupees 200,000, and when he sold the old machine he will purchase the new machine on the same date, means 31st October 2017. Now let's start read requirements. Prepare machinery accounts from 2015 to 2018. Accounts are closed on 31st December every year. So for your information, I am going to tell you that I have prepared the solution on Excel for convenience, but you go as per your prescribed instruction to solve this question. So here is the solution. So as two methods of depreciation has been asking for us from us to be prepared. So here is the first schedule under the method of reducing balance method or diminishing balance method. Schedule is here, date. Here is the every year we are going to be depreciated on 31st December 2015. So I am going to mention this date. So the cost of the asset is 600,000. If there is a residual value or salvage value, so we are going to depreciable cost by subtracting that salvage value from the cost of the asset. So depreciation is 0.10, 0.10, 0.10. So depreciation expense is equal to 0.10 into 600,000, and you will get the value for 1 year. But we are going to be charged this for the 6 months, means half year. So I am going to divide this by 2. So I will get the this amount 30,000 depreciation expense for the 6 months of the year 2015. So 31st December 2015, I am going to be record this amount of depreciation expense and engage accumulated depreciation the same year 30,000, it will remain same. So book value sorry balance at then will be obtained by subtracting this depreciation expense from the cost. So we will get 570,000 balance or book value at the end of the year. We will, as the method is diminishing balancing method or reducing balancing method, so now this is a reducing balance method. It will be become the opening balance of the 31st 1st January 2016, but we are dealing with the uh, depreciation closing at the year end, so we are going to use the date 31st December 2016. So this is the amount here. Again we are going to apply the same rate 0.10. So we will get the 57,000 the depreciation expense on balance sheet date, and accumulated depreciation is how we are getting this figure 87,000 under that column accumulated. 30,000 plus 57,000, it will be equal to 87,000, and the balance at the end of the year is equal to 57 57,000 must be subtracted from the 570,000. So we will get this. Otherwise, you will go from here 57 minus 57,000. You will get 513,000. Again, we are going to apply the same rate. We will get 42,750. The reason is that we are going to calculate it for 10 months, not for the whole year, because we have sold it on 31st October 17. So we are going to make uh, calculation here for the sake of easiness and understanding. So here I am going to show the formula. So look at this. I am going to multiply C25. This is uh, C25. This one into B25. This one into 10 by 12. So this will get the amount and 42,750, and we will add back this into 87,000, 129,750. So by subtracting this amount from this, we will get 470,250. So at that day, our book value of the asset is 470,250. On the same date, we are going to purchase a new machinery of cost 200,000, and we are going to use the same depreciation rate 0.10, and it is for the 2 months, so 3,333.33, and it is accumulated for the new machine is 3,333.33, and the remaining amount or book value is 196,667 approximately. So in the next year we are going to record it for the whole year. So for the whole year is 19,000 on the basis of this balance. So the book value of the asset at the end of the year 31st to 2018 is 177,000. Now, as we know that the company has sold out the, now the book value has been taken from the schedule regarding from the uh, sold machine, which is equal to 470,250. Sell value is 140,000, and loss on sale of the machine is equal to book value minus sell value is equal to 330,250 under the method of reducing balance method of depreciation. So we will pass this journal entry. Cash count. This is cash count means that the amount that you have received against the asset. 140,000 loss on sale of machinery, which we have derived from here, and accumulated depreciation that we have get from the uh, column of accumulated from the schedule. So to machinery account, old is equal to 600,000, to cash account is equal to 100,000, is a compound entry on the same day. So let's move to the other method, which is called straight line method, and schedule is here. Remember, in previous method we are going to calculate depreciation on the reducing balance, but here please keep in mind that the amount of depreciation for the current year is remains same. Although the book value is reduced by the same amount, but the amount doesn't decrease as you have witnessed in the previous case. See at the depreciation amount 30,000, 50,000, 42,000, but here you will observe that the amount of depreciation is remains same, and but it will be changed as per the proportion of the use in the current year. So come to the this is the same amount. So accumulated depreciation, so you should correct it here 30,000, 30,000. So and it should be 30,000. Yes, now it is correct, because we have used this machine for 6 months, so we are taking half of the value of the 60,000, which is equal to 30,000, and again subtracting this 6,000 minus 30,000, we will get 570,000. Remember that this is our book value, but our transaction remains depreciation of the asset remains same for the current year 60,000, so it will add back to 30,000 to get 90,000 the accumulated depreciation. So now we are going to minus 60,000 from 570,000. It is equal to 510,000. If you compare it with the previous one, here is 513,000. So here is 510,000. Again, we will deduct the same amount in the next year, but in the year 2017 we are going to sold out that one, and we use this machine for the 10th month. So this is the portion that we have used to be here. This, let me check here. 60,000 into 0.10 into divided by 12. I don't know which amount will come. So 50,000, and 50,000 is going to be add here 90,000 plus this 50,000, and this is 140,000. So accumulated depreciation 140,000, and here is the book value of the asset at the end of the year under the straight line method, 460,000. So if we will get 320,000. So here is the increase. We are going to determine the loss. Again the same method. This is our book value 460,000, sale value 140,000. Subtract it from the book value, we will get the loss 320,000. I am going to mention it with the red line or red color. So this is the entry that related to the expense and the day on the sale of the assets. Depreciation expense account accumulated depreciation, and accumulated depreciation must be subtracted from and the asset account in the balance sheet on the date of closing. This is a cash that on the October 31st October 17. So cash is we receive this one, accumulated depreciation 140,000, loss of sale of machinery 320,000, and which is equal to the total cost of the machinery. Now we are going to discuss the machine accounts under reducing balance method. We already discussed the schedule of the depreciation expenses under the two methods, reducing balance method and straight line method. But now I am going to discuss with you the machine account under reducing balance method. Look at this. This is the first year 2015 to cash account 60,000 at 31st December 2015. The by depreciation expense 30,000, which is for the 6 months. So for the whole year is with the rate of 10% is 60,000, and for the 6 month it is 30,000. So balance by balance brought down is equal to 570,000. Now as it is prepared under the method of reducing balance method, so look at this. We are going to be taken this amount as the opening balance of the year 2016 on 1st Jan 2016, 570,000. So now that is applied on this amount rather than keeping it constant, as we discussed in the straight line method, and in coming video we are also discuss the machine account for the straight line method. So 570,000 is here. So 10% is 57,000, and by balance brought down is equal to 513,000. So total is same. Now opening balance, now in the year of 2017 has been started. The opening balance carried down from the last year become of the last year the closing balance become the opening balance, and the rate of interest as we are going to record the depreciation expense on the closing date. So we have sold this machine on 31st October, so we are going to record the transaction or journal entry on the 31st October 2017. So what happened here? Depreciation expense is 42,750, which is taken from the which is taken from the this amount by charging 10%, but for the 10 months. So look at the formula is here. Uh, as I have calculated in the schedule. So I have taken it from the schedule by cash 140,000, by loss on sale of machine. So look at this. If you look at the sum of these three rows, it will be equal to 513,000. So on the same day we are going to purchase a new machine which is 200,000, and depreciation expense of this machine for the 2 month is 3,333.33. So balance brought down is equal to 496,667, and on the opening day of the year 2018 it will be here. So its closing on closing date, its depreciation expense is equal to 19,667 under the reducing method. So we will get this balance amount which will be carried towards the next year. Now come to the machine account which has been made under the method of straight line method. The first entry is same as we have recorded in the machine account under the method of reducing balance method 30,507. Now come to the next year on 1st January 2016, and the balance is here, which is also known as book value on 31st December 2016. So in this case we are going to charge a fixed amount, a fixed installment of the 60,000. So we are not going to record the depreciation amount on the reduce. So as it is a straight line method, so we directly charge 60,000. So 60,000 is here. So we will subtract 60,000 from 570. We will get 510,000, and the total is 570,000 and 570,000. Now the year 2000 has been started. 1st January 2017, the opening balance carried down from the last year, which is the closing balance at that time. Here 510,000 depreciation expense because we have sold out this machine on 31st October 2017. So depreciation expense has been charged for the 10 month rather than 12 month. So this is the amount that we have charged here. How we calculate this? Look at this 60,000 into 10 by 12. So this amount by cash 140,000, by loss on sale of machine under straight line method, which is equal to 320,000. But here we look at this under the reducing balance method, it is 330,250. So on the same date we are going to purchase a new machinery of amount 200,000. So by depreciation expense it has been clear from here. So uh, we have charged this depreciation on the 31st December 2017, which is equal to 3,333.33. Balance is 196. Look at this, the balance is same under the both methods. So in year 2018, the expense amount is charged, depreciation expense is charged equal to 20,000. It will not be changed. Also, the book value of the asset will be going to be diminishing over the period of the years. So this is the total amount. This is the total amount. So I hope you will understand this question. If you have any question, please ask me in comment section. If you want to correct me at any point of this solution, please come up with your suggestions in comment sections. Thanks for watching. Assalamu alaikum.